companies have been able to protect their bottom line by laying off workers. But their bottom line has also been helped by the surging stock market. The stock market rally has become self-fulfilling. The more it goes up, the better corporate earnings look, which pushes up stocks even more. This is what George Soros calls reflexivity. And reflexivity leads to bubbles.
近日，宏观趋势博客作者和经济学家 David Wu 表示，美股已形成索罗斯式的反身性闭环，企业通过裁员保护利润，推高股价，而股价上涨又刺激富裕阶层消费，从而支撑企业业绩。这种自我实现的循环正在催生泡沫，一旦 AI 泡沫破裂或消费者信心崩溃，美国经济将陷入严重衰退。
This week, Amazon announced that it will lay off 14,000 workers. UPS said that it's cut 34,000 operating positions over the past 9 months. Target said last week that it would let go of 1,000 workers. Applied Material is laying off 1,400 workers. Accenture early in the month said that it would lay off at least 11,000 workers. According to the Challenger report, U.S. companies have laid off 940,000 workers in the first 9 months of this year. This makes it the highest since the 2020 recession. Indeed, it is close to or even at recessionary levels. What's more, the layoffs are spreading across many industries. I have no doubt increasing job insecurity is the main driver behind the slump in consumer sentiment. Consumer confidence fell again in October, for the third consecutive month, to the lowest level since April. This is despite the fact that the stock market is up 40% since April, gasoline prices down, and 30-year mortgage rate is down. It is very clear that Americans are worried about their jobs and see more job cuts coming. Since the start of Trump's second term, we've seen a surge in layoffs and a sharp decline in consumer confidence. The only thing that has been going Trump's way is the stock market, of course. Indeed, the U.S. economy might have already gone into a recession if it weren't for the surging stock market. The surging stock market is creating wealth, a lot of wealth, for those who own stocks. This is why the sale of luxury trucks are booming. This is why luxury travel is booming. Delta Airlines reported this week that premium cabin revenue increased by 9% year over year, while main cabin revenue dipped by 4%. This is what really is going on. The AI bubble aside, the stock market is going up because companies have been able to protect their bottom line by laying off workers. But their bottom line has also been helped by the surging stock market that is fueling the spending of the well-to-do American households. In other words, the stock market rally has become self-fulfilling. The more it goes up, the better corporate earnings look, which pushes up stocks even more. This is what George Soros calls reflexivity. And reflexivity leads to bubbles. Scott Bessent, Trump's Treasury Secretary, used to work for Soros. I'm sure he gets the joke. This is likely why Bessent and Trump have become the biggest cheerleaders of the stock market. They're market-savvy people who realize what it means when a bubble bursts. This is why they're pressuring the Fed to cut interest rates. This is why the pushback by Jerome Powell this week on a December cut was so interesting. What it says to me is that the Fed does not want to blow more air into the stock market. The Fed is never going to say that the AI rally is a bubble, but it does not mean that it wants to be its accomplice. What all this says to me is that the US economy is in trouble, especially if I'm right that the AI bubble is not sustainable. As I've argued in many previous videos, the AI bubble faces two major risks. One, the AI revenue growth ramps up more slowly than expected. Two, that China closes the technology lead of the US more quickly than expected. I think both risks are growing and underpriced. I remain short NASDAQ 100 and long Nifty 50. The NASDAQ leg has been painful, but I'm staying with it. I'm also short US consumer discretionary versus staples. I'm also long 5-year Treasury notes. If I'm right about the bubble bursting, the Fed will have no choice but to come to its rescue in good time. That much I have no doubt.